Welcome back, Alpha Hunters. Hope everybody's having a very marvelous Monday, as it is the first trading day of the week. And let's go ahead and talk about what kind of going on today over the weekend. So over the weekend, we know still some more Middle East conflict stuff. This is not headline news or anything like that, but it is one that you need to understand the risk that are in the marketplace and in the world and stuff like that. And we still gapped up. We still gapped up roughly 0.85% here on the market. And my initial thoughts this morning was either the market is going to be bullish here over the next week or two, 3, 4, maybe a month or two, and to damn all with any risk or bearishness out there, or this is going to be a great sell. And when we look at the daily picture, I'll show you a very good reason why this was a great sell. We saw a little bit of the bounce there at the end of the day on Friday, so we got that continuation on the gap up. I was definitely surprised how much the market did gap up, because we gapped up pretty good amount there. But we have sold down from that high, because that was basically the high of the day. It was right there around that open the first couple minutes there. So we kind of just have steadily tried to bounce and consolidate a few spots, but we've just kept breaking it down, especially here over the past hour, big breakdown. And about 10 minutes ago, that was the low of the day. So we'll see what happens. But yeah, SPY definitely getting some big breakdown today, especially, guys, is not bullish, right? We had a huge gap up here, 0.85% of a gap up, coming on the back of some pretty big risk events happening in the Middle East over the weekend. Guys, this is not, that move today is not looking good there. That was looking kind of bearish. Qs. I'll probably talk a little bit more on the Qs there when we get to the daily picture, but the Qs are definitely down a lot more than the SPY, down 1.5%. SPY's down roughly 1%. IWM down 1.25%. You can see they gapped up, traded a little bit higher, than they've kind of just steadily been trading down throughout the day. The DIA as well, nice gap up. It's been trading down, only down 0.5%, not doing too bad there on the DIA. The RSP currently down roughly 0.7%. Also gapped up, a little bit of bullishness right there in the first 5 minutes, but has just kind of continued to sell out throughout the day. So taking a look at the daily picture, because this is probably going to be the better story, and I get that we've seen some pretty good movement throughout the day today, intraday, but when you take a look at the daily pictures here, you're going to really going to see some stuff. So we have a bearish engulfing over a bearish day, and I forget what they call that. Don't typically see that all that often, but we do have one here today. And I have a hard time believing the RSP is going to rally to get back above like 162 here, which would kind of be the lower end of the body that we had on Friday. So what we kind of had in a lot of these, I'm going to kind of say this, is we had that breakdown day on Friday, and all we did on the gap up today was we retested, right? Kind of mentioned we'd have an early week retest. I really did not even fathom to think that it would be on the gap up today. That gap up, if you were trying to be bearish or you wanted to go bearish, kind of probably did scare you a little bit. Probably made you pause if you were trying to go bearish or take a bearish position, because the gap up was pretty serious. But once you started to see the market slip a little bit, it's like, okay, I think I'm still comfortable being bearish. And the DIA, you see the DIA breaking through that 100. Now, we talked a little bit at the end of last week. We got multiple spots here for the DIA to have support. So the DIA for the next roughly 8 points, 10, or I'll probably say the next 10 points. If you can get through the next 8, 9 points, yeah, it's going to be kind of tough, because it got different spots. It would be support, these highs. You kind of got some different lows in here from when we just got sideways consolidated at the end of the year last year and the beginning of the year this year. So the DIA breaking that 100 or holding below that 100 today, that would be a big deal. Obviously the IWM which has been getting hit pretty good, and a lot of it's been because the yields have just been climbing so much. Yields are climbing again today. We'll take a look at that. But yeah, IWM, if they hold below that 100, I honestly, I don't think I'd be wanting to be bearish like right here, right now. We saw some pretty good breakdowns Wednesday, last week, Friday, and we've seen a pretty good breakdown day today as well. And that probably goes for quite a bit of these. Maybe not the Qs. And taking a look at the Qs, I'd say the Qs is finally the one that's breaking. This is the one you want to see break if you want to try to be bearish on any one of these. And I think this is a big breakdown here today for the market, just the stock market in general. You finally get the break below that 50 EMA. Most likely we will close below it. I'll say most likely because, we've seen several times in the past several months that, you get that late day, the last 30, last 45-minute pops or rallies, and they're pretty strong. But I'll say it would be pretty far-fetched to see us rally and close above that 50 EMA today. So then what you're next looking for is maybe these highs that we had back over here, maybe around 430, which would be like another 2 points lower. Honestly, I don't think that would be a big deal. Maybe we kind of trade a little bit lower tomorrow. Not as bad today. I mean, currently being down 1.5%. Maybe we're down like 1/4 or 0.5% tomorrow. Kind of just more of a sideways day. Maybe we kind of try to rally tomorrow, and then we roll back over, kind of end on a section of lows, and it continues into Wednesday. And then maybe we break down to that 100 here on Wednesday, which would be about 10 points lower from where we currently are, which would be around the 422 to 421 type area, which is where we have this low. And that's really probably it. I mean, unless I go back and look longer term. That would be the move I would be looking for, is probably down to that 100. And then probably reassess. And I'd imagine it probably happens kind of soon. I would expect, as far as soon, I would expect it to happen earlier in the week rather than later. So like probably by Wednesday, maybe not so much Thursday, Friday. That would be my initial thoughts on that one. Qs, yeah, or not the Qs, SPY. Yeah, big breakdown. Obviously, finally getting below that 50 EMA as well. If the Qs continue to break down, the SPY's going to go with it. I mean, we know this. But we definitely have a pretty good amount of room here down to the 490, 100 SMA here. And we don't really have much good pivot levels. I mean, we have one maybe about a point or two lower right here at this high. And then we got a couple of these lows, but those are kind of minor. Maybe we have like a little small 1 day intraday pause there. But I would be looking more for a move to the 100. That's what I'd be looking. I think that snag, if you snagged bearish positions on that gap up this morning, if you could brave that, I think that was a sweet play. You have this little sideways consolidation. If you snag that on the retest, because a lot of these, that gap up, if you look right where that gap up was today, is right at that 10 and that 20 EMA. That was exactly where we kind of gapped to. So that was that retest, right, on the SPY. So if you were like, okay, I wanted the retest into the moving averages, it happened on the gap up. I mean, there's no wrongs in trying that. If that was your plan, but I wouldn't have wanted to see it on a gap up. That's kind of my only thing. Why I would have been cautious on it, but once you saw it start to break down, it was like, okay, green light, go bearish. All right, now as far as take a look at everything of VIX. So VIX, we finally got that close over 17 on Friday. Let me zoom out here. Obviously, a nice little pop here again today for the VIX. Not a crazy pop higher. So, I mean, we could definitely continue to see the market sell off. And we're not having crazy spikes. I mean, yes, it's moving higher, especially compared to the levels it's been over the past like 5 months, 4 months, 4 or 5 months. But, I mean, this isn't crazy. This isn't crazy. Nothing like what we had back in like over here. Like we were having crazy spikes back in 22. So if we get to those type levels, then yeah, we'll probably be looking for at least a short term, maybe medium term type of bounce on the market. But we could definitely continue to see the market sell off as the VIX continues to climb here. Dollar DXY. Slowing down. Kind of mentioned this at the end of last week. I don't think I would want to be bullish on the dollar right now. Definitely want to probably peel back some positions, but I could definitely see a snapback here over the next sometime this week, maybe Wednesday, Thursday. And I think that was kind of the idea. We were talking about Friday is maybe it continues up a little bit more because these are very strong days that we had Wednesday and Friday last week. So maybe we continue higher in a couple days this week, maybe Monday, Tuesday. Maybe we get to like Wednesday, Thursday, we see a quick snapback. Kind of like this one back over here, right? We had a couple strong days back over here in September. Let me bring it over and I'll. There we go. A couple strong days right here, and then we just kind of continued up a little bit, and then we had a quick snap back down to the moving averages. It's not too long, not too often, and we are deviated away at least from that 10 EMA all that long on the DXY. So that's why I'm saying like we are pretty well deviated away here. I would just rather look for the pullback into that 10 EMA, even if it's maybe takes a couple of days. Gold still holding tough. Still holding tough. Dollars up, yields up, gold is up. All right. That is a very interesting one. Wouldn't have thought that. But it's up almost 1% today. If it consolidates sideways here, I mean, we can definitely push up later. I would imagine a lot of people are going to be counting this as probably a four wave. If you're an Elliott wave like enthusiast, right here you got the 1, 2. You probably got a 3 to there. So if we just sideways consolidate here for a couple days, maybe that's a 4, and then we'll push up. Maybe that's a 5, and then we'll get the pullback later on. Something like that might make some sense. But yeah, the fact that we didn't immediately drop off, immediately continue the next day, kind of lets me think that maybe we'll just kind of consolidate sideways and then push higher. One more little pump before maybe we have a little bit more of a pullback. 10 and 2 inversion, not 10 and 2 inversion, sorry. 10-year yields. Nice bounce today. Would have thought we'd be a little bit more in a consolidation, sideways consolidation type spot, but we still might be. I mean, we might pull back a little bit tomorrow on yields. I'm trying to move the line here. So if we do try to go connect in with the upper end of this beginning part of this channel that we possibly started, just possibly, we still got room to run. I mean, we still got room to run in, the higher, the longer it takes, the quicker we're going to be getting to that 5% type of range, upper fours, and whew, it's going to be a great question if the market does, what the market does at that point in time. But yields, I mean, they look good, man. They look so strong. Here's an intraday and look at it, 15-minute. Look at this consolidation. This kind of just breaks and hangs out, pushes up towards the end of the day. That looks so strong going into tomorrow. Yields look pretty good. 10 and 2 inversion. All right, so we're back to climbing quite a bit higher here on the 10 and 2 inversion. So let me take a look at the 2 year. So the 2 year's not climbing as much as the 10 year. You see the 10 years up 2.4% on the day. The 2 years only up 0.7%. So yeah, that's why you see the 10 and 2 inversion climbing quite a bit. The 2 years not holding as much, not performing as well as the longer terms. So let me look at the 30-year yield then. So the 30-year yield's up 2.4%, a little bit outpacing the 10-year yield very slightly. I mean, this looks so bullish. Like if you just see that like in a regular stock chart, never mind just the yield and percentage, like it looks very strong. Yields, oh my gosh, yields are putting so much pressure on bonds. Look at that drop on the HYG today. HYG had been holding tough, has been holding tough. We finally got that breakdown from this level that we had back in February. Thursday, we held below that low. On Thursday, we had a second day follow through, hold below that low on Friday, and then you can see we just dropped off today. Man, that is brutal. Just continuing to drop at the session lows. Jeez. So HYG not looking the best. You're probably easily playing this down to this 200 moving average. You can see how we at least paused here when we were at the 100 moving average. We even tried to bounce a couple times, but I would at least be playing this to the 200. Makes a lot of sense to me, and you're probably going to reassess at that point in time. LQD, yep, bonds are breaking down bad, man. Jeez, they're breaking down so bad. So that's the LQD. TLT's breaking the lower ends of this channel. All right, so this is something that we looked at really over the past like 2 weeks. I don't remember exactly what day, but it's almost very reminiscent of this kind of time period where we had a downward channel. Let me just put a channel. Let me copy paste. All right. So we had like a little bit of a downward channel, right? And then we just broke the lower ends of that downward channel. And you can see like we kept falling. So I would fully expect this to continue to happen. So if this is the TLT, then maybe you're expecting bonds yields. Yeah, maybe you're just expecting yields to continue to climb, right? Because that's what this would say. Because this is that's what our current place kind of reminds me of. We had a downward trend. We broke the bottom end. We continued. It wasn't just like a 1 or 2 day thing. This lasted for almost a month. See, we broke it February, roughly the 11th, and we continued all the way down until we kind of bottomed like March 18th. It was about a month, a little bit over a month, and we just kind of continued to drop there on the TLT. Obviously, this is a higher price level, right? And then we kind of tried to consolidate sideways, and then we want to break it down later on, like a year later. But that's kind of what this reminds me of. You know, downward channel. Now we're breaking down. Let me get rid of. There we go. So we got that downward channel. Now we're breaking that down. And maybe we see a bounce for a couple days, and then we see like the actual rollover later. So I think this previous time, I think we had like a quick breakdown. I think it was like right here. We had a quick breakdown, and then we had a couple days where TLT kind of bounced, and then it had the drop off. So yeah, I think, man, yields are probably going to be climbing. Count on them maybe resting here for the next couple days, I would think. And then TLT maybe rest, maybe has a little bit of bullish twinge to it. Nothing crazy. And then look for the yields to really kind of drop off. Yields probably spike or continue to go higher, and then look for the TLT and some of these bonds to kind of drop off. Anyways, man, we are seeing some things that are really concerning for some bulls out there. All right, take a look at that sector rotation. We got healthcare doing very well today. So it's a defensive sector. You can see that they're doing pretty well. Actually, almost flat on the day. Barely negative there. Staples, outperforming as well. Financials doing pretty good. Materials, industrials, energies. All those are outperforming on the day. Utilities kind of in line with the market there. Communications, discretionaries, tech, and real estate. The big underperformers on the day. You see real estate really dropped off kind of in that mid-morning kind of time frame, just kind of led the day lower. But over the past hour or so, a little bit over an hour, it has been tech and discretionaries that have absolutely gotten shellacked. You can see tech has really dropped off there. So if we go to the intraday and take out the gap, we'll probably see, well, a lot of things dropped off there. You see tech was outperforming kind of going to that, 1 o'clock Eastern time time period, and you see now it's underperforming. So it went from outperforming to underperforming intraday. Anyways, intraday, let's see how things going. Healthcare staples doing okay. They're outperforming. Energy's doing okay. Materials a little bit better than the market. Industrials, utilities, financials, barely kind of with the market there. You, what is that? Discretionaries, tech, communications, and yeah, real estate at the lower end of the day.